And welcome back to Ag Enterprise Management. I'm your instructor for the course, Matthew Johnson. If you have not done so already, make sure you check out the course website and the syllabus to see what's happening. This week we're going to be talking about the basics of bookkeeping. Very important to be tracking money coming in, money going out. Let's get started. All right, so learning outcomes. We're going to go over the basics of bookkeeping, how it's vital to tracking income and expenses and creating financial reports. So in the last module, we went over the financial reports, balance sheet, income statement, cash flow statement. And the process of bookkeeping is how we generate the data and track the data to be able to create those reports. Learning objectives include learning about how to track income and expenses, keeping track of receipts, generating invoices, learning about GET, General Excise Tax, and this is specific to Hawaii, and learning about record keeping software. And we're going to be focusing on QuickBooks. So there's a lot of interesting online software that you can use to help with the process of bookkeeping. All right, so we talk a lot about in this course about planning. And so financial record keeping, bookkeeping, this is all part of the planning process as well. So even before you get business started, you want to think about how you're going to be keeping track of your income and expenses. And really, what's your system for bookkeeping? And there's a lot of different ways to do it. You can write in a book. You can use different kinds of ledgers. Even pull out the abacus. A lot of different ways to do it, and there's online apps, all different kinds of things that you can do. So it's really up to you and your team, and preferably to also work with a CPA, certified public accountant, to help you set up the system and how your business is going to be tracking your income and expenses. All right, so we're talking about why keep financial records, yeah? And once again, this is similar to the financial statements. So really, it's very similar to the reasons why you need financial statements. To be able to get financial statements, you need to keep really good financial records. All right, so once again, Internal Revenue Service and also Hawaii Department of Taxation, right, they're going to want to see the proof of income and also your expenses and how you're keeping track of that. So if in some instances you were audited by either the IRS or the Hawaii Department of Taxation, they would, one of the first things they want to see is how are you keeping track of your financial records. All right, and also decision aids for you as the business owner, you and your partners, you need to be able to make business decisions. So to be able to make a business decision, you need to know what's going on with the money. Where is it going in? Where is it going out? All right, so by having good financial records, it helps determine, or helps you determine what direction you want to go with the business. Institutional requirements. Right, so this could be going to the bank. Right? If you go to a bank for a loan, one of the first things they're going to be asking for is, asking for the financial statements. What kind of a financial record system do you have? If you're applying for a grant, that's one of the things they ask about is what kind of a financial system do you have in place? And this also may be for environmental regulations, right? So, financial records could also keep track of the different agricultural practices that you have in place as well. So this could be a requirement as well for if you're getting organic certification, or if you are using certain kinds of pesticides with your farming operation. Just keeping track of all different kinds of records for the overall business. All right, so how do good records help your business? So really, this is something that you're going to be looking at on a weekly, monthly, maybe even on a daily basis, depending on your business and how you operate. So one of the first things that you really need to know is what's your cash balance. And sometimes people say, oh, well, I can just look at my bank account or just log in online. And that's one way to know your cash balance. But let's say you've written a check that hasn't been deposited yet. So that really, the cash balance that you see isn't necessarily totally accurate. So that's why record keeping is a more accurate, more complete way to truly know what your cash situation is. Know who is in debt to your business. Okay, so this is very important. If you have delivered a lot of products to a restaurant, but you haven't kept track of that, how are you going to collect money if they haven't submitted payment? So having a system in place for being able to track that. Say on the other side of things, that's keeping track of your business debts. So if you have bills that you need to pay, what's your system that you have in place for tracking that, so you know what you owe to others. Also, this helps you file correct and timely tax reports. All right, so specifically for Hawaii, general excise tax payments are due either on a monthly, quarterly, or semi-annual basis. So you need to know how much that you need to pay. Hopefully you're not overpaying, and you also don't want to be underpaying, because then you may have the tax department coming back for you and asking for more money with penalties attached to that as well. And then just knowing your overall financial position. Knowing, cash balance is one aspect of the business, but how much money overall is owed, how much money is expected to be coming in, or what is your cash flow situation looking like for the next few months. So it's really the intent of helping you plan and know exactly where your money is at any given time. And all of this helps you make specific business decisions. This may include hiring or having to fire employees. You may have to get to the bank to apply for a loan if you see that you're going to be having a cash crunch in the next few months. So all of this helps with the overall business decisions. Okay, so one thing that's real important when you're first starting up your business is somebody needs to be responsible as the financial manager. And if this is just you as the single sole proprietor, then you're going to have to be the financial manager. Maybe if there's a partnership, understanding who's really responsible. If no one's responsible, then nothing ever really gets done. Is something that somebody said at some point, but makes sense. Okay, so someone needs to be in charge of really tracking the money and having a good understanding of what's going on with the financial obligations and where and when money is going to be coming in. All right, so we'll talk about income. All right, so this is money coming into the business, and so there's a lot of different ways that money can come in. So first, it could be revenues from the sale of products and services. So if you're at the farmer's market and you're selling a pound of eggplant for $4, that $4 that you receive is income that you can then track as part of your income. This also could be profits reinvested into the business. So this could be money coming in from the owners of the business. Also could be loans or credit received from outside the business. So if you do get a loan or you get a grant, this is going to be another source of income. And once again, the owner's equity. So money coming in from either the owners or outside investors into the business. So once again, the financial manager has to decide how to best use these sources of income. So the financial manager may say, hey, well, we owe money on a loan, or we owe money on certain bills, so we need to go ahead and use this revenue that came in to go ahead and pay those bills. All right, expenses, okay? It could be a lot of different kinds of expenses. All right, so this could include wages and salaries. Could also be a cost of maintaining machinery, equipment needed. Any kind of marketing, advertising, if you rent on land or a building, utilities such as electricity or internet, and also different kinds of insurance, whether it's car insurance, general liability insurance, all kinds of different stuff. All right, so then also to meet the unexpected expenses, the owner or financial manager needs to have reserve emergency fund of cash that can be made quickly. So that's the thing always about business. Now you can plan and plan and plan and have a good idea of what all your expenses be, but a vehicle could break down, or you may have some additional taxes that are due that you weren't aware of. So it's always good to have reserve funds in the account to pay for any unexpected expenses. All right, so as I mentioned with bookkeeping, there's a lot of different ways to do it, but there's kind of like the basic components, and then there's all kinds of tools, whether it's online tools that you can use. Everything from taking pictures of receipts and having it automatically go into your record keeping system, and then also tying in your bank account to your record keeping system so that it can track income and expenses that way. But you really need to understand the basic components first, and then you can figure out what tools are available out there to help you. All right, so sales receipt book. This is a very basic way of doing it, but this works great, especially if you're going to be doing retail sales, let's say at a farmer's market. This is a great way to quickly write up what was purchased, what was the amount, and then a copy goes to the customer, and then a copy stays with you. Right, so this is a good way to quickly keep tabs of sales that you have at a specific time. And then later when you're in front of a computer, or if you're using some kind of a book for tracking these expenses and these sales, you can write it down into your ledger. A business checking account. So this is highly recommended that you have a separate checking account from your personal account, specifically for the business. This just makes sense because it just makes the process of accounting and bookkeeping that much easier, instead of trying to just mix it up with your own personal funds. And if you don't have that separation of accounts, it's be very easy to just start withdrawing money using for personal expenses that are really supposed to be designated for the business. And some kind of checking account register. Right, so you can see that here on the bottom. Like I said, there's a lot of different ways you can do this. This is typically with a checkbook. Comes just keeping track of what's going on, the money going in, the money going out. And there's ways that you can do this online, or you can just do this in a book, some kind of a ledger type system. All right, and then another important thing to do is you got to keep track of all of your receipts. So this is a way of confirming expenses that you are saying that the business has occurred. Okay, and this is something as simple as you can see here. This is a filing folder that's listed by month, where you just go ahead and you can stuff the receipts into the appropriate month, and then you can go from there. But as I mentioned too, there's other online ways that you can do this, a lot of different ways to do it, but one thing you do need to keep in mind is that you have to keep track of all of your receipts for the business. All right, so other areas, other records to keep track of. So keeping track of your bank account statements. So a lot of times if you have an online account, those account statements can be just kept online. Loan and credit card statements, same thing. If you have a loan or a credit card, keeping track of those statements, and once again, those can be tracked online. GET taxes. So these are the general excise taxes that you are paying to the state, as I mentioned, either every month or every quarter or semi-annually, depending on the amount of revenue that the business is bringing in. So you need to keep track of this somewhere, of what the taxes are due and what's been paid. Also with payroll, so if you have employees, you need to be paying certain kinds of taxes, such as unemployment insurance for payroll. So keeping track that these payments have been made, and then also income taxes, right? So if you are having any kind of profits for the business, keeping track of the taxes that you have paid on the business for that as well. Okay, so we already mentioned with sales, keeping a sales receipt book. Another thing that's common, especially with farming, if you're going to be selling product to a store or to a restaurant. So if you're doing wholesale sales, typically what you'll be doing, if payment is not going to be made on delivery, then you would be generating an invoice. And this is a document that typically goes with the delivery. So if you're delivering to a restaurant, you're going to also be having an invoice that you're going to be leaving with the restaurant. This is basically saying, hey, we have provided you with this product. Here's what you owe us. We expect payment within a certain amount of time. Okay, so we'll show some examples of what an invoice looks like. So basically, this is a document that is a precursor to a sales receipt. So you would have an invoice that says, hey, here's the product we're giving you. Here's the payment that we expect and when we expect it. And then once you actually receive payment, then the sales receipt will be generated. So this is typically, you wouldn't be having an invoice, say at a farmer's market, because the sale is happening right then and there. So you can just kind of skip that step. But if you're selling your product wholesale, then typically a lot of times payment is not being provided cash on delivery or right then and there at the time of delivery. So you would need some kind of document that shows that you've provided the product and you expect payment. Right. So here's an example of an invoice. All right. So you can kind of see the different components of it. All right. So you can see this is from Oahu Fresh, billing 12th Ave Grill, awesome restaurant in Kaimuki. Over on the right hand side, you have the invoice number. So this is a tracking system, the date that the invoice was generated. And there you have to the right of the date is the terms. So net 15, so basically we're expecting payment from 12th Ave Grill within 15 days that the invoice was generated. Okay, so this is letting them know that, hey, this is when we want to get paid. If they end up not paying within those terms, then you may want to contact them, or if determine that they're unable to pay within the terms that you've created, then that's a business decision for you to make, where maybe you no longer want to work with that restaurant because they're not meeting the terms that you have determined. And underneath there we have the products that were delivered. All right, so 3 different items. We have ruby streaks, wasabi mustard, baby leaf, and baby greens. Right? And also you have the quantity. So it could be, typically this is going to be by the pound, and then the cost of each pound of those. So on the right, it starts adding up all of the expenses for each line item. Then you have your subtotal of $73.60. And then we have to add on our tax. So since we are selling this at a wholesale price, because the 12th Ave Grill is going to be repurposing the products that we sold them, we're only going to charge them the wholesale GET rate of 0.5%. Then we have the total amount due, which is $73.97. So this is a form of an agreement, of a contract, saying, hey, Oahu Fresh has provided 12th Ave Grill with these items, and the total due is the amount expected to be paid within the terms provided within 15 days. All right, so when you're purchasing an item, as we already mentioned, you have to save your receipts. Okay, so if you're using a simple binder that's separated by months, then you can go ahead and put those receipts in the proper pocket for the month. If you're writing a check, you also need to keep track of the check number, the date, who you pay, the amount, and description in the check ledger. And record of all expenses. This includes cash, credit, check, and the monthly expenses sheet. All right, so we'll talk a little bit about record keeping software. So the most popular software out there used by small businesses is called QuickBooks. And this is a great way to systematically keep track of bills that you have, also generate invoices, keep track of when you receive payments, creating sales receipts. And then if you do this properly, then it also keeps track of your cash balance in all of your different accounts, and also can help create financial statements. So from a QuickBooks system, if you're doing your record keeping in here, then you'll be able to go ahead and generate your balance sheet and generate your income and loss statement. All right, so we just went over an example of the invoice. So this is what the invoice looks like on the back end within QuickBooks. So you can see all the information that we need here is inputted, and then it generates a PDF version that you can print out and then either email that to your customer or print it out to physically hand it to them. All right, so you can see upper left hand corner, you can choose your customer, and then all the way down through we can choose all of our different products and services and the rates, and it can automatically calculate everything for us. So it makes it a lot easier than having to physically write up an invoice each time you have to create one for a customer. Okay, thank you so much. As always, please check out the course website for any reading and written assignments for this section. Aloha.